Investing in gold and silver is a must if you wish to reap the diversification benefit. When the equity markets are down in the doldrums, it is these precious metals that will provide support to your portfolio. Recently, Edelweiss Mutual Fund launched the new fund offer for a fund of fund that invests in gold and silver ETFs. This is an industry-first product that allows you to invest in both these precious metals within the same fund. On this occasion, speaking to Business Standard, Radhika Gupta, Chief Executive Officer of Edelweiss Mutual Fund, compared gold to large cap equity funds for the stable returns that it tends to provide. And she compared silver to mid-cap mutual funds. Just as mid-cap funds are capable of providing a return kicker during a bull market in equities, silver is capable of doing the same when there is a rally in commodities. Do watch this interview to learn more about the benefits of investing in precious metals. Welcome to our show. Indians have traditionally had a lot of love for gold and silver. Many of them hold, of course, all households have gold jewelry, and many affluent ones even have silverware. But increasingly over the past 5 to 7 years or 10 years, we have begun to see the financialization of these products. And now, of course, Edelweiss Mutual Fund has launched a gold cum silver ETF NF fund of fund. So our goal for this interview will be to educate our viewers about the advantages of holding these precious metals in their portfolio. My first question is, if you could elaborate on the benefit that holding these financial products in the portfolio offers.
So, hi Sanjay, thanks for having me. I think the primary benefit that these two asset classes have, gold and silver, and they work in tandem, is that they are not correlated to equities. So when equities do well, perhaps gold and silver will not perform as well. But in years like 2008, years like 2013, and many other sort of such examples, 2011 was one case, when equity markets have done well. So if you look at 8, where there was a 50% correction in equities, 11, which was a weak period, gold and silver tend to do well. So they tend to be strong diversifiers to your portfolio. And I think in asset allocation, when we say it's important to build a portfolio of different asset classes, just like we talk about international investing, you and I have talked about that many times before, because it's a diversifier. Gold and silver play that diversification role in your portfolio. There are also other advantages. Gold is considered as a hedge to inflation, and the data says that over many, many years. So that is also an advantage to holding gold. I mean, they have positive supply-demand dynamics. But to me, the number one advantage is the value of diversification.
So let us talk about gold. What are the economic drivers for gold? When does it do well, and when does it not do so well? In what kind of economic environment?
So I think with any commodity, the drivers are supply demand oriented. So I think if you have to understand any commodity, you have to understand supply, of course, in both gold and silver is limited. It is a commodity. Demand in the case of gold comes from two sources, jewelry and really investment purposes. So I think these are the two sources of gold demand. If you look at when does gold do well and when doesn't it do well, gold generally performs well during an equity market down cycle. That's its relationship with the broader market. If you look at the historical data, and if you look at annual CPI and gold returns, gold is a good hedge against inflation. So over 5 years, if your annual CPI is 5-6%, gold returns are north of 12%. So gold has proven to be a hedge against inflation. So I think those are the drivers as far as gold is concerned. Silver, if I could continue on silver is a little different from gold. So silver actually has a jewelry use and an investment use, but its more significant use is heavy industry and industrial, which is why if you look at the characteristics of silver is if gold is the large cap of equity, silver is the mid cap. It outperforms during precious metal bull rallies. So in any period you see where gold has done well, when markets have done well, when commodity markets have done well, silver has done significantly better. Like gold, it's also a hedge against inflation, etc., etc. All of that is there. The other thing for silver, from an economic point of view, that a lot of people may not know, is that it has a rising demand from new age technologies. So if you look at things like smartphones, electric vehicles, solar panels, all three things that viewers will be very familiar with, they have a component of silver.
What would be the benefit of holding a mix of gold and silver?
Yeah, and I think that is the crux of the question for listeners or viewers of this conversation. See, I think both are individually strong commodities in their own right. When we thought of a bundled solution, Sanjay, we've always believed in something called bundling innovation. Can you buy gold and can you buy silver separately? Of course you can. What is the benefit of combining in a single product? Low correlation with equities, stability of gold, but upside of silver come together. So if you hold silver standalone, it tends to do very well in bull cycles, but it tends to be very volatile. If you hold gold standalone, it tends, gold is sort of timeless, but you don't capture the upcycle component of silver in a real commodity rally. So the blended product actually works very nicely. I'll give an analogy to a similar concept in equities. In equities, as I said, we have large caps and mid caps. Now, what's the point of holding a large and mid cap fund? In fact, we did a large and mid cap index fund launched last year. You get the stability of large caps plus the upside of mid caps without the volatility of mid caps. So I think the concept is very similar.
So essentially, you get a hedge against the equity markets. And when you combine the two, then you also get stability.
Yes. And an upside kicker. So you get, the risk adjusted return is very powerful.
Silver will offer the upside.
Yeah, silver will offer the upside, gold will offer the stability. So the blend is very nice. As I said, the exact proxy is large and mid cap.
And how much should gold and silver constitute in a retail investor's portfolio? How much should be the allocation?
This has always been a hard question, Sanjay, but I think the precious metal allocation can be 5 to 10%. I also tell retail investors that they should not try and time this allocation. I've been saying this for years, well before we launched a fund. Just keep a static 5-10% allocation. Just as again, we say another diversifying asset class, which is international. I've always said have a 10-15% allocation there. Again, you can have a 5-10% allocation here, and it's a static allocation.
And what should be the minimum holding period with which investors should enter these assets?
So definitely, this is not a one-year idea. 3 to 5 years is the right holding period. But if you are thinking asset allocation, then a static allocation of 5 to 10% makes sense. I mean, one of the great things I recommend for people is to set up an SIP in the fund. The SIP returns actually over 3 to 5, 10-year period look very, very stable.
Is this a good time to enter gold and silver?
Okay, so timing is, of course, in any asset class, tricky to predict. I think there are two positive possible thrusts for timing. And we at Edelweiss AMC, I think we don't obsess ourselves with timing of the funds, but we try to make sure that when we launch NFOs, the timing is not out there, it's not bad. One is that both asset classes, to be frank, have not performed in the last year or so. It's been a weak period. And generally, it is good to be greedy when others are fearful. So it is good to invest in asset classes which have historically not done well. The second is that both gold and silver are inversely correlated to the dollar index. And we have seen over the last couple of months near a significant rally in the dollar index. Now, with interest rate hikes sort of peaking out, a possible US recession ahead of us, you could see a reversion in the dollar index. And if that happens, that may augur well for gold and silver. So these are sort of two positive indicators. One of the reasons that we thought this may be a good time to put this to market.
Could you tell us a little about the product itself?
Sure. So it's a very simple product. It's a fund-of-fund structure, and it invests in both gold and silver ETFs, 50% in gold, 50% in silver, and we will rebalance that so it becomes very efficient for the consumer. We will choose to invest in any of the industry gold or silver ETFs, good ones that we see basis liquidity, tracking error, and of course, cost efficient expense ratio. So that is the way we are thinking about it. But very simple fund-of-fund structure, investing 50% in gold ETFs, 50% in silver ETFs, and rebalancing that consistently.
Thank you, Radhika. I think I've finished with my questions. I hope that many viewers will gain from this interaction and they will include gold and silver in their portfolios for the diversification benefit. Thank you so much.
Thanks, Sanjay.